Hey everybody, Bill Prince here. I'd like to welcome you to week number 11 already of Business Simulation Workshop. We are definitely on the downhill slide of the course. We sit here on the first frosty Sunday morning of November, and of course we'll be over here second week of December. So time is really zipping by quickly, at least from my perspective. In that regard, and as I noted to you in this week's weekly announcement, there are several of you who have yet to begin uploading your decisions to the simulation, so you're getting a little bit behind, and that needs to be done because remember, you have to do your uploads and then you have to submit the SWOTs because the SWOTs are really the primary area in which you are going to be receiving the points for the simulation. If you've missed a deadline for a round to get a simulation uploaded, that is not a problem. You can still make that round's decision. In fact, you have to make that round's decision for you to move on to the next set of decisions. The only difference is that it will not process automatically if you miss decision making before a round ends. So what you will need to do is notify me once you have completed that round, and then I can get in and simply click a button and process that round for you manually, and then that will allow you to move on to the next round, create the results from the round you just did, and provide you with the information that you need to do your SWOT analysis. So again, please get those in if you have not done that so far, because you don't want to be sitting here in the middle of December with no points. The same is true for the assignments in the West Strategic Management book. Several folks have still not submitted all of their work in that area too. Again, that's pretty much read and answer questions and some pretty low-hanging fruit in terms of points there. So again, get that turned in if you have not done so already. This week, again, as I've noted, we're going to be talking about chapter. I'm sorry, we're going to be uploading competition round 4 of the simulation, and again, this is not quite new territory for those of you who completed the practice rounds, because again we did 4 practice rounds, so some of the developments will be about the same. Where things will get interesting is when you move into rounds 5, 6, 7, and 8 in upcoming weeks, because you'll see the product segment circles diverge even more than they already have, and that can make product placement a little more challenging, and the simulation is not quite as forgiving if products are misplaced in those circles. So again, should be kind of challenging, I think, for you, and that's good. By and large, frankly, the decisions that have been coming out of the first few rounds of the competition have been, for the most part, very good. Several of you are doing exceptionally well in terms of sales and profits and stock prices, and you're avoiding emergency loans, and your contribution margins are outstanding. A number of you are having what I call solid, steady simulations, which are just as good to me as the ones that are knocking the numbers through the roof, because a good solid steady performance is something that you can't fault too much. And then several of you are starting to get a little bit upside down, and again, the reason for that, I think I've pointed out to you in some of the debriefs of your rounds. Those are generally reasons of lack of financing, and I just want to talk a little bit about that. I think I may have mentioned this last week. And again, I don't know that it's not that you're not financing, it's just that you're financing incorrectly. And then inventories, the whole forecasting thing. Those of you who are ending up with big emergency loans, those are usually the 2 areas that cause the biggest amount of problems. And then this week as well, and I believe maybe it even kicked in last week, and I can't recall whether I talked to you about this or not, but we're going to review it quickly again if I did, and that's the ability for you to utilize total quality management. So I'm going to pop on here real quick to the TQM page. I picked one of your teams. Just to look at here, but this is TQM, and in TQM, This allows you to invest money between 500,000 and 4 million. Those are kind of the areas that you want to stay between in certain initiatives that can help your company in various respects. When I say a minimum of $500,000, that's because you're not going to see any effect for investments less than that. And then if you get over $4 million, you start seeing diminishing returns in the initiatives that you are investing in. It's cumulative. So, for example, if you were to invest $1 million this week in a TQM initiative, that $1 million would still be there next week. So, if you invested another $1 million next week, that would be a total of $2 million that you had. So, each of these initiatives, and there's, let's see, 2, 4, 6, 8, 10 of them. Each one is described in the little information bubble next to the listed initiative. And it will tell you what investment in that initiative will do for your company. So, for example, if you're having margin issues trying to get your costs down, investment in the CPI Systems initiative will drive your costs down a bit. Vendor JIT, again, this will decrease material costs and administration costs, which will help, again, with those margins and getting those costs down. Quality Initiative Training, QIT, will reduce labor costs. Channel support systems. This will increase distribution channels, so that sales budget, and increase demand for your products. So if you're seeing lagging demand, this is a good one to invest in. Concurrent engineering, this will reduce your R&D cycle time. So as you go to develop new products or adjusting existing products, you may have a product that in its current iteration is going to come out in, say, August of this year or this next year. By investing in concurrent engineering, you can speed that cycle time up, so it might come up in July or June, which again gives you a couple more months of sales for that product. Green, UNEP Green, will again reduce material costs and increase demand. Benchmarking reduces administrative costs. Quality function deployment efforts will again reduce your R&D cycle time and also could increase demand for your product. CCE 6 Sigma training, reduce labor and material costs, and GEMI TQEM sustainability initiatives. Again, it's kind of a best practices environmental policy, and again, that can reduce your material costs and provide some reduction in labor costs. So again, you may not want to invest in all of these. You may not have the money to invest in all of these, but it certainly can help. So, for example, and here's how it works. So let's say that you say, I'm going to invest, let's find one, concurrent engineering, which is going to increase our cycle time or decrease our cycle time. You say, I'm going to invest $500,000 in that. So again, remember, these numbers are, you put in the number, then you assume there's 3 zeros after that. So you hit that, and then you recalculate. Boom. And then over there, you'll go and you'll say, okay, that will increase, in the worst case, it'll increase or decrease my cycle time by 1%. In the best case scenario, 2%. So you could also say, well, I'm going to invest $1.5 million in that. And we hit that, hit recalculate. And is that making, yes, and see, so suddenly with that additional $1 million of expenditure there, you've decreased your cycle time in this worst case scenario by almost 12%, and in the best case scenario by 15%. So that's kind of how that works. Let's look at CPI Systems, which is going to reduce your material costs. Let's say you're going to invest $1.5 million in that, or we'll say $1 million. There we go. Okay, and we'll hit recalculate. And we should see, yes, again, it will decrease your material costs by 1%, which can be, significant. Again, if we change that to 1.5, hit recalculate, we should see an even bigger, 2%. So that's pretty good. Now, watch what happens if I do this. Watch what happens if I put $5,500,000 here. Let's hit recalculate. Right now we're at 11.9 and 15.2. Oh, Nope, it's not going to let me do that because the maximum it's going to let us invest is 5 million. So let's do 5 million. There we go. There we go. So a little bit, but again, sort of diminishing returns as related to $1,500,000 versus $5 million. So anyway, spend a little bit of time looking at TQM. It can really make a difference. And for example, on this like concurrent engineering and things of that nature, before you do that, go back and look at your product release date, invest your funds, and then go back to your R&D page and see what that has done to the month that it's going to come out in. So again, these can be very helpful to you in this regard. The other thing I just wanted to mention a little bit was financing, and again, it's not, some of you just for whatever the reason are not engaging in any kind of financing at all. I don't know why that is. But others of you have, but what I'm seeing sometimes is like you're going to issue stock, and so you say, well, I want to issue, 10,000 shares of stock. So for example, right now you have the ability in this company to issue a maximum of 20,000, or almost not $20,000, so 19,942, and you'll say, well, I'm going to issue 10,000 shares of stock, and you'll do this 10. And then hit recalculate, and obviously that has, that's 100 shares or 1,000 shares of stock. So that's not what you want. So if you're going to issue 10,000 shares of stock, you want to hit 10,000. You want that number there, okay? The same is true with your bonds. Again, you can $28 million. Use those numbers. So don't just put 1 or 5 or 10, because again, without those zeros on there, that's exactly what you're going to issue. And so I've kind of seen that happen and be a bit problematic for you. Again, don't hesitate to do that. Issue stocks, bonds, and short-term debt, because again, it's better to have some money owed than to be so upside down that you can't turn the company right side up eventually. So in any event, that's what we sort of have on the docket this week. If you have any questions, comments, or concerns, don't hesitate to holler at me. I know one other thing I wanted to mention to you, and again, I've probably mentioned this to you periodically. I did kind of switch up the final assignment because in talking to our assessment of learning committee, they wanted to have me do this for you to be consistent with the other sections. Originally, we had an assignment here, which is kind of a learnings paper where you would sort of reflect back on the simulation and some things you learned. And what we're doing instead of that is this report to shareholders. This will be due on the final day of class. And again, let me click on it and show you exactly what it is. It's essentially a PowerPoint template that you will complete once you've completed the last round of your simulation and it has processed. And I'm going to pull it up here. Hopefully there we go. It'll open for us. Come on, Mr. PowerPoint. Hello. There we go. Okay. Let's see if it'll let me do that. There we go. Okay. So anyway, it looks like this, and again, this is exactly the PowerPoint that you can use. It's kind of set up in a team context, and obviously you all worked individually in a foot race strategy in this iteration of the simulation. So anything that talks about, how did we make decisions as a team and that sort of stuff, you can ignore that. But simply all you have to do is complete this template. What was your strategy? Which markets did you emphasize and how did you manage them? Which markets? And that's just the other. Let's see here. Your strengths, your weakness, your opportunities, your threats. So sort of a last SWOT that you would do. Which of the other companies would you like to buy? And then it would ask you some questions about, purchasing, if you're Andrews and you purchase Baldwin, how would it affect your balance sheet? How would it affect your income statement? How would it affect your cash flow statement? If a company wanted to buy you at the end of round 8, how much would they pay for you and why? This sort of the methods by which you arrived at team decisions is kind of is not applicable because you didn't really work with other individuals, but just kind of go through your thought process about how you decided to make decisions and so forth. And then there's key learnings. What were the takeaways that you came away with from the simulation, and then here just list what you would anticipate your forecast for your last round would be, and you could fill those in from the Capstone Courier round 8. So that's really all that is. You don't have to get real creative or anything like that. Just fill that in and submit that to me as that final project, which will be in lieu of the learnings paper that's mentioned in the syllabus. So, in any event, have a great week. Again, if you're a little bit behind on some assignments, get those in. If you're having questions, problems, or issues, please don't hesitate to contact me. You can email me. You can call me. Send smoke signals. Airplanes in the sky. Whatever you want to do. Contact me if you have any questions. If you want to have a Zoom meeting, let me know, and we can get that set up as well. And we will visit with you all again a little bit later. So take care.